Hello and welcome everyone to Gold Asset of the Day for the 22nd of September 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? Well, firstly, in the last week, hedge funds and money managers, they have increased their overall net long position on gold by 1%. So of those hedge funds that do have a position on gold, 69% are currently long. With that, we have seen gold prices break out $40 to the upside so far this week, finding support at $1,742 per ounce, then breaking out towards $1,780. Now, this of course comes off the back of a very strong dollar here, which is broken out towards 1 month highs. As we talked you through last week, our expectation was that the dollar would pick up in the lead up to quad witching on Friday, where you have contract expiry for options and also futures. With that, we saw the dollar slingshot higher up towards 1 month highs. We took the opportunity there to bank over 400 points of profit. For every 10 lot contract you'll be trading, that's $40,000 of profit. Now, the dollar index has played its typical role here in building up momentum as we've got a risk-off environment, especially with the acceleration to the downside on equity markets at the beginning of the week, with the S&P 500, Dow Jones, and also the Nasdaq down 2.5% on Monday as a result of the fear and the risk-off environment that we continue to see as a result of the Chinese property developer Evergrande, and that is creating a big liquidation event in the market, which has propelled the dollar here to 1 month highs. And we talked you through that in a lot of detail last week, where I expect the dollar to pick up momentum, especially as we go into the third week of September. You're going to see end of quarter profit taking. Also, you've got China off on their public holidays over Monday and Tuesday. We have seen exactly that liquidation event that we forecast with you on the week ahead commodity report. We alerted you to that last week as well, in thinner liquidity and thinner market conditions, where you do have Asia off on the public holiday at the beginning of the week. We've definitely seen that big move lower on many markets, not just on the stock markets, but we've also seen industrial metals like palladium, platinum and copper also have a significant sell-off and pullback at the beginning of the week. Everything that we discussed with you last week. Now, what I would pay attention to now is Wednesday's FOMC statements. That will be delivered at 7 o'clock London time. Again, often this has a big impact for the metals, so you want to watch gold very closely. What we've observed over the last year is that typically on the FOMC statement, gold can pick up momentum into that announcement and after that announcement on the actual day, but watch out for counterflow later on in the week over Thursday and Friday. It's often the case that traders get in the move too late for gold, they end up FOMOing in, buying at the top, and then it's very typical for gold to sell off later in the week after an FOMC statement. Then going into next week, we also have the final few days of the quarter, the end of the month as well, before we transition into Friday, the 1st of October, which will be a new quarter, moving into the fourth quarter. So be mindful that it's very common going into next week that you could see further upside on the dollar and liquidation on many markets, which would include some of the metals here as well. As you would have noted, the dollar has now broken out to 1 month highs. The gold to silver ratio has also broken out to 9 month highs, which in the short term suggests that gold will continue to outperform other metals such as silver, platinum, palladium and copper. Gold is essentially getting the safe haven bid, as well as the US dollar index at the moment. So that's where you want to make sure that you're really capitalizing on this cycle, on this time of year, as we talked you through in detail on the week ahead commodity report, and also last week on gold and silver asset of the day. Watch out for the dollar to build up that momentum as you get towards the end of the month and the end of the quarter. I hope that many of you have capitalized on that dollar strength the same way that we have. So of course, this comes back to where you want to be utilizing research, statistics, facts, data in the market. Of course, be aware of how the hedge funds, money managers and banks are positioned in the market. Alongside that, be aware of key areas of liquidity, the intermarket correlations in the market, the ratios, understand fundamentals, macroeconomics, be aware of the highest impact news items which will cause the biggest moves on commodities, really creating those big impulse moves where you can capitalize on big gains fast, and also, of course, understand how hedge funds, money managers and banks are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.